Yo, what's up everyone? It's Ben. Listen, we all know real estate is a fantastic wealth building tool, but the biggest hurdle? Often it's cold, hard cash. You find that killer deal, the numbers make sense, but your bank account doesn't quite agree with your ambition. Trust me, I've been there, staring at spreadsheets at 3 a.m., wondering how to make it work. But here's the secret. You don't need a trust fund or a winning lottery ticket to win in this game. What you do need are creative strategies. Today, I'm breaking down 5 financing methods that can help you scale your portfolio faster than you ever thought possible, all without emptying your bank account. Alright, let's kick things off with a classic house hacking. This strategy is perfect, whether you're just dipping your toes into the real estate waters, or you're a seasoned pro looking to expand your portfolio with minimal out-of-pocket expense. Here's the gist. You buy a multifamily property, think a duplex, triplex, or even a small apartment building. You live in one unit, becoming a landlord in your own right, and rent out the other units to tenants. Their rent checks can cover a significant chunk, if not all, of your mortgage payments. Imagine living practically rent-free while building equity in a valuable asset. Plus, you're gaining hands-on experience as a landlord, learning property management. Now, I know what you might be thinking. Living with tenants? No way. But hear me out. Being a live-in landlord has its perks. You can keep a closer eye on your investment and address maintenance issues promptly. Plus, there are different levels to house hacking. You could start small with a duplex or explore larger multifamily properties as you gain experience. House hacking is like hitting the easy button on those calculations. It's a proven strategy to break into the market, build equity faster, and say goodbye to those pesky rent checks. Alright, moving on to strategy number 2, seller financing. Now this one's all about thinking outside the traditional bank loan box and tapping into a hidden gem of real estate investing. With seller financing, you're essentially striking a deal directly with the seller, where they become the bank. Instead of getting a mortgage from a traditional lender, you make payments directly to the seller, usually with agreed upon interest rates and terms. Now you might be wondering, why would a seller go for this? Well, it's a win-win situation. For sellers, it means potentially faster closing times, a steady stream of passive income from the interest, and even potential tax advantages. And for you, the buyer, it means potentially sidestepping those stringent bank requirements, getting creative with financing terms, and maybe even snagging a better deal overall. Plus, you're building a direct relationship with the seller, which can be invaluable throughout the process. Think of it like this. You're cutting out the middleman, streamlining the process, and potentially unlocking opportunities that wouldn't be available through traditional financing. Of course, like any strategy, seller financing requires due diligence. It's crucial to have a solid agreement in place, clearly outlining the terms, payment schedules, and any contingencies to protect both you and the seller. But when done right, seller financing can be a game changer, opening doors to deals and helping you scale your portfolio faster than you thought possible. Let's talk about strategy number 3, which is all about leveraging the power of relationships, private money lending. Now this one might sound a little intimidating at first, but trust me, it's not as complicated as it seems. Private money lenders are essentially individuals, think friends, family members, or other investors who are looking for better returns on their money than they'd get from a traditional savings account or the stock market. They lend you the funds for your real estate deals, and you pay them back with interest. Now, the beauty of private money lending is the flexibility it offers. You can often secure loans with less stringent requirements than banks, potentially faster approval times, and more customized terms that fit your specific deal. Think about it. You're tapping into a network of individuals who are invested in your success and who understand the value of real estate. It's about building relationships, showcasing your vision, and presenting them with a win-win opportunity. Of course, transparency is key here. It's crucial to be upfront with potential lenders about the risks and rewards involved, providing them with a detailed investment proposal and clear exit strategies. But when done right, private money lending can be a game changer, giving you access to capital that might not be readily available through traditional avenues. It's about building trust, demonstrating your expertise, and creating mutually beneficial partnerships. Alright, let's dive into strategy number 4, partnering up. Now, this one's all about combining forces, leveraging each other's strengths, and creating a synergy that can propel your real estate investing journey forward. Let's face it, not everyone has it all: the cash, the time, the expertise. But that's where partnerships come in. You might be a deal-finding machine with a knack for spotting undervalued properties, but lack the capital to make a move. Or maybe you're a skilled project manager who can transform a fixer-upper into a masterpiece but don't have the bandwidth to handle the day-to-day operations. That's where finding the right partner can be a game changer. You bring your unique skills and resources to the table, and your partner complements them with theirs. It's about creating a win-win situation where each partner benefits from the other's strengths and expertise. Now, finding the right partner is crucial. You want someone who shares your vision, values, and investment philosophy. It's important to establish clear communication, define roles and responsibilities up front, and create a legally sound partnership agreement to protect everyone involved. But when you find that perfect match, a partnership can be incredibly rewarding. It's about sharing the workload, pooling resources, and accelerating your growth in the real estate market. Alright, let's wrap things up with strategy number 5. The ultimate investor hack using other people's money, or OPM. Now, this one might sound a little sneaky, but it's completely legal and incredibly effective. OPM is all about leveraging financial tools and strategies to maximize your buying power without depleting your own cash reserves. Think of it like this: you're using other people's money to build your wealth, all while putting your own capital to work elsewhere. Now, there are different ways to tap into OPM. One popular method is leveraging a home equity line of credit, or HELOC, which allows you to borrow against the equity you've built up in your primary residence. You can use these funds for down payments, renovations, or even to purchase additional properties. Another powerful tool is business credit. By establishing strong business credit, you can access loans and credit lines specifically for your real estate investing ventures, often with more favorable terms than personal loans. And finally, let's not forget about joint venture opportunities. This involves partnering with an investor who brings the capital to the table while you contribute your expertise, managing the project and sharing in the profits. OPM is all about being resourceful, exploring different financing options, and maximizing your leverage to accelerate your real estate portfolio growth. So, there you have it, folks. 5 creative financing strategies to help you break free from the cash barrier and scale your real estate portfolio faster. Remember, you don't need to be a millionaire to get started. You just need to be smart, strategic, and willing to think outside the box. If you found this video helpful, give it a thumbs up. Hit that subscribe button for more wealth building strategies, and let me know in the comments. Which of these strategies are you most excited to try? The key to success in real estate is taking action. So what's your next move? Don't wait. Take the first step in your real estate journey today. Thanks for watching, and I'll see you in the next video.